Hello, everyone, and welcome. We'll give everybody a minute or so. We're about right on time. So let people get jumping in here and we'll get started just about right away. So I hope you are having a great week, maybe getting a little bit of warmer weather and ready to talk about some business planning. I think we got some useful, great insights for you, as well as how we help our clients and some of the things you may be able to take advantage of, even if you don't work with us, as well, to help you along. So this one's going to be a little bit different in the fact that it's not a slideshow. It's going to be more us going through the practical things, hopping back and forth, etc. So I'm hoping it will actually be a little bit more engaging and fun, but it is a little less structured. So we'll go ahead and get started here. So let me go ahead and share my screen. So as I said, this one's going to be a little less presentation, right? So we're going to go for entire screen over here. All right, so hopefully we're good. You can see my screen. So, kind of where we're starting off, and the nice thing about this will be that most of the stuff here, you will be able to get to just by clicking around our website. I put a couple of the handout PDFs that I have here in the files section, so you can download those as well, so you can have them. And we will also maybe provide a link afterwards if you didn't get a chance to get those, or you're watching the on-demand version. So we'll jump right in here. So you can come to our website, Rebel Financial. We're pretty good on Google. So even if you just Google us, we should pop up there. You come up to our main website and you can kind of see, everything we got in terms of, how we work. We try to be very transparent, put everything out there. But really the reason why I'm starting like this is because most firms, most professionals you're going to work with, if you work with an advisory firm, are going to mainly do two things. They're going to do investment management and they're going to do retirement planning. Sometimes they'll do comprehensive plans. Every financial advisor says they do financial planning, but I found, through my experience, the very few do really good, complex, planning where they're looking at all different aspects, because it's really complicated. You have to have a lot of software experience, sometimes staff, et cetera, to do it well. And of course, it's a lot of work for the pay. Most of them want to do investment management because once they onboard you and they get you an accounts and everything, then it's great money. And it's pretty easy ongoing wise, right? But when you look at someone like us, there are some other wealth managers out there, but we're, even expanding beyond what a lot of wealth managers do. Then you start adding on a lot of the other things, in terms of estate planning, special needs planning, tax preparation, the more niche parts of financial planning. Whether that's education, major purchase. We're getting ready to beta a new software just on house purchase. And you would think that it would be really simple, but it's not for younger people in terms of what they're going to buy, how much they're going to put down, the interest rates, for where they are, how much they can afford, where are they moving, and the timing of that with all the other goals that they have. And this software is going to allow us to do that very modular and a lot faster and help people, that are at the beginning more of their journey, rather than a lot of these services are for people when they've made it way on. And that hits us to our subject today. And this brochure is in the download, so you can find it. It's also on our website, just right down here at the bottom of the page right here. You can click on it, bring it up, and you have it, right? And we try to put this more in kind of a planning or a story type format, so you can kind of go through, and see, how does financial planning work, and what are the other things that we do beyond just the investment and the plan, but like cash management, insurance, and real estate and business services. And that's what we're getting into, right? Business services, and looking at the different things that we do, from tax preparation to tax planning to business consulting, business coaching, building 401k and pension plans, as well as helping our business clients with their benefits design, payroll, And if they want, they can build we'll talk about it more later, but you can build in some of the benefits, kind of HR-ish into, we have different levels of the payroll and bookkeeping. And so it's real nice from that perspective that you can get kind of all these things in one place. And we do have partners like CPA partners and attorney partners when it gets a little bit too complex for us, because you can't be the best at everything. But for the vast majority of people, we can pull these in and really have some good synergy, economy of scale as well too. So I'm not going to go through our whole brochure. Just want to just show you when we're talking about this, half of what we're talking about, and we'll get to kind of pricing and stuff, later on, is that, when you're working with a traditional advisory firm, you're going to get a couple things. Investment management, you're going to get, most people hire advisors that they really like. You're going to get somebody that's on your team, that's helping you, et cetera. And that's that. And then if you pay extra or they're a little bit better at bundling like we are, then you'll get the financial planning with it. And then even fewer actually do taxes. And then you can see all the extra stuff that we do in addition to just those things. And then, now don't get me wrong, that's a lot. Right. And again, we'll get into pricing, because again, we're not cheap, but if we can put a lot of this stuff together and get economy of scale for our clients, there can be considerable savings, especially for our business owner clients. And so that is a key thing to take away from this. There's not many of us that will put all this together, because frankly, it is hard to do. But if someone is able to do it, that's kind of like where it's like, hey, check out this business webinar about how it could possibly save you a boatload, and we could do a terrific job. So this is a new business services page that we're just launching today. It's going to get V123, so it's going to continue to get updated. Since we've kind of transitioned over the last couple of years to net worth, we've mainly been kind of keeping most of our business services to our existing clients that have businesses, and now we're to the point to where we're ready to launch that out, take on new business owners, because we've kind of refined the system and it's ready for prime time and to benefit more people. And so just as we talked about before, let's bundle more things together than just the core traditional services. And so when we look at this, we can put payroll, bookkeeping, tax preparation, tax planning, and then all the other benefits inside of there, 401k, pension, et cetera. So that, let me refresh this. Oh no. Okay, hold on. This is the downside of using the real pages. Let me get here. I gotta open my Slack and get the updated link. Boom. We're back on track. 401k and pension, as well as helping to build out, and if you want, manage. It's one of those things with us you can choose, and again, I'll go over it. And then getting into business consulting and coaching, succession planning, and then the value-added services that we bring through our whole net worth, full wealth management services. So even like banking, estate planning, business attorney consultation, et cetera. And so I'll get more into details here, but when we're just looking at this, you're seeing like how much more there is. Okay. And so when we talk about the business consulting and business, I'm going to do poll one. Let's do poll number one, and let's get some interaction here. So I'm going to launch it here just a second, or it should be out there. And it says, what stage is your business at? Are you thinking about starting one? You start up first couple years. You're a young business, but thriving, 2 to 5 years, established 5 to 15, mature 15 plus years, or actively looking to exit or sell, regardless of how old the business is. So looks like our poll is mainly people thinking about starting a business. Great. We got established 5 to 15 years. So good deal. All right, we'll close that out. So that's good. We got a little differential from people that are thinking about it versus someone that's already hopefully been successful for a good number of years. So kind of digging into kind of the core of our business, like consulting and coaching, we kind of chose to partner primarily with the Value Builder system, which was built off of the original book, Built to Sell by John Boatload. And it's a whole program that basically has three underpinnings of interaction, right? So the main one here is the Value Builder assessment. And so what it does is you have to take some time to put your information in here through it. There's about 40 questions. It's not too terribly long, but again, it has to be meaningful. We have to get some decent data out of it so that you can really be evaluated per your industry peers. Okay. And what it's looking for, and then this is another one of the files that you can download inside there, but what it's looking for, and the eight key things that it's kind of scoring you upon are these. Okay. And so I'll go over each one of them, a little bit. I don't want to get in depth and this take forever long, but this is kind of the core of how, we want to help you, even if it's superficial and you just want to take it and you want to see it. Maybe it's 30 or 40 minutes of your time. It's easy peasy. You're curious, check it out. We'll also send that link to you after. Well, 3 links. There's 3 different things that we have, and I'll go over them. We'll send those links. If you feel like taking it, go for it. So that's the superficial. Then the more in depth is hitting each of these over time, 6 months to a couple years, to improve the areas that you may be weak on. And so basically what they've drilled down to is there's 8 main drivers of company value. And there's a whole program on how to help do this. And for different people, it may be a little bit different, and it takes time. But financial performance, so what is the history of, how much revenue, what's the profit margin, how's that changed over time, how good is the record keeping, etc. Your growth potential. So not only, what's the history and how well have you grown, like what is it looking forward in terms of continued growth. So obviously it's great to buy a business that has good cash flow and is cash cow, but it's obviously a lot more valuable to have something that has good cash flow that's going to continue to grow as well. And then that Switzerland structure, what that's talking about is that if you have any like critical kind of bottleneck, or not bottleneck, but you're dependent on someone like a key employee or a huge customer, or if there were tariffs against your main supplier from China, that there's no one else to buy from and it's just going to hit you hard. Those things can obviously increase risk considerably to someone that was going to buy your business. The teeter-totter, basically dealing with cash flow. Does it require cash to keep things going? Or is it produce the extra and you can keep taking off the table? You obviously can see why one would be better than the other or more attractive to a buyer. Recurring revenue, are you as a salesperson, or do you have salespeople that are out there having to go, kill it and bring it back every day? Or do you have recurring revenue to where it's automatic? Like a subscription model, or a lot of times how people pay advisors is a % of an account, right? That residual income coming in is a lot more desirable to a buyer. How monopolistic is your business? Is it super competitive? If you heard of Morningstar or whatever the case, they'll rate companies based on their economic moat. Kind of like the old medieval moats. Do you have a big moat that protects you from outsiders, coming in and taking over your castle, or do you have a thin one? And it's easy to, if somebody even got a little bit of a competitive advantage on you, to really be able to hurt your business. How happy are your customers to stay with you or repurchase or bring someone else to you? And then hub and spoke. This is a super critical one. And I think people probably think about it a lot if you've ever thought about selling, but it is, how dependent is your business on you, or, the most important person? And if they lost that, would it still be worth as much? Would it still work, right? And so obviously a business that can work without you as the owner is a lot more valuable than one that requires you, right? And so that helps you understand, a bit about what this is about. But this just talks, right here and say, hey, for someone that really hasn't thought about this, they've just been working in their business. They may be a tradition or an awesome practitioner of your profession, but they really haven't invested a lot into like tuning the machine to make it an awesome business. Maybe you have an awesome business from the fact that you serve your customers very well. But in terms of how desirable is it, to function by itself and be profitable and live on without you, it may have a low score, right? But if you work on a lot of these things over months or a few years, you can really lift the score up. And you can kind of see there, coming down here, what's the multiple? How many times the pre-tax profit did the buyers buy for a company that is scored here versus a company that is scored here? I mean, it's double, right? If they scored a 90 plus. Okay. And so that's a huge increase, right? I mean, it takes work, right? But this is like one of the main things we really wanted to, over time. I've been doing this for over 20 years and had a lot of clients that have businesses. And I mean, it's not surprising if you know the statistics, but it's just kind of sad to me that I've seen a lot of business owners just kind of walk away from the business, or, they just let somebody else that was good to them take it over, which is great, for, continuation of taking care of customers and also for the next generation to have an opportunity, et cetera, but almost no monetization. But the vast majority of small businesses do die after, the founder or the first generation is gone. And so we really want to help our clients that have started something, that does provide a living for them and their employees, and hopefully does something great for their customers, and is the backbone of our country as well too, that we can, systematize this to where you can monetize it, be a lot more sure that it's going to live beyond you to take care of all those stakeholders that we had talked about. And, just for us, I mean, just doing this, a fraction of that extra value that could be captured, and it will probably pay for our entire lifetime of serving our clients that are business owners. And so this truly is kind of that Stephen Covey thing of like win, 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 win. Like if we can do this well, so many people are going to win by helping our clients that have businesses do these things well. And so, with that, this is just another one. This one, the score didn't increase quite as much, the 80, and it went up to like 71% higher. So just another kind of handout of like how that well. So again, we'll send this out afterwards. If you want to take the value builder assessment, then you just kind of start by filling in this, and then you'll go through, depending on how well your business off the top of your head, 30 minutes to an hour and some change, right? But again, we're trying to get something meaningful that's actually going to help you and give you a good objective comparison towards peers, okay? And try to be objective yourself, right? If you take this, it's easy to do, I know, because I've started multiple businesses, to like be overly optimistic on yourself or whatever the case. Try to be objective and real so that you can really see where you're at, because the objective of this is not just to get a high score. You're not selling right now, is to get the real deal and then to move the needle up, right? And so take that if you like. So the next one that we have here is called the pre-score. And so when you think about selling your business, I think a lot of people like, yeah, eventually, my business is worth a lot. It is provided for me and all these people, and it has the potential to grow, et cetera, et cetera, et cetera. But are you prepared to really walk away from it? I don't think a lot of people think about that until it like really confronts them. Sometimes not until after they're gone. And you can see here, 75% of owners regret a year after they've sold that they did it, or how they did it, or what's up. And so this is a much shorter questionnaire, but it helps you to kind of say, are you really ready to do this, like emotionally and mentally, right? That, there's going to be, you're happy with the future vision of the people that are taking over, and what's the structure going to be of, how they pay you out. Are you going to be able to detach? I mean, a lot of people, their business is their life, right? And then it's great to monetize it. It's great to know that it's in good hands, but then what are you going to do? And then what about the people, if your team members, that they're going to be taken care of and treated well, and customers as well too, right? So this one's called the pre-score. You can take that as well too, just to kind of see in a more standardized way, are you prepared for that, right? And this is kind of what it looks like, and some of the things we were looking at there, it's right here, but you can just go ahead and take it by clicking there and kind of going through the process as well. The last one, and I think fewer people think about this, right? They think about how they've saved up and what assets they have, and they think about how much they could sell their business for, and they might be pleasantly surprised, to how much they could get paid out for it. But this one really says, if this is kind of the end, right, of working, and you've had this income from your business that has provided the cash flow to have the life that you want to, et cetera, that cash flow is going to stop, right? That's what the person is paying for. And so how much do you need, considering your other assets, how much do you need to get out of the sale for it to actually accomplish everything that you want to, kind of with your financial plan, from retirement to, major purchase or other goals, to taking care of kids or grandkids, to leaving the legacy you want. So you got to figure out that freedom number. So they call it freedom point. Okay. And that might be 4 million, but you can only get 2.5 million out of your business right now. 2.5 million sounds like a lot of money, right? But if it doesn't get you to where you need to be, it's not going to work, right? Or you're going to have to like really, tamp down your plans or your, what you want to do. And that may not be the thing. Well, then that's a really cool number to know, because then it tells you what you need to get out of your business, so that when we're doing this and we can increase, we say, all right, we've got to increase, by 70%. And we know the pain points, or the ones that we can push the hardest, that were the things probably dragging down your valuation, and get it up way higher to where it's actually going to hit, that freedom point, right? And so these things kind of dovetail together. So again, you can take this one as well. It's a little bit more simplistic. Obviously, if you're, and I'll get into this, if you're a gold level client of ours, then we'll do a much more sophisticated plan of those cash flows and taxes, and optimizing things like Roth conversions, and we can look at different deal structures, etc. Okay, so let's see. We do, through this program as well, we have and do a lot of these. I'm thinking about turning them all to on demand, but you can kind of see these are different presentations. We're also going to start, for the business owners that want to, doing group workshops probably a couple times a month, as well as for some of our clients that want to really engage as well, one-to-ones. If you're really digging in deep, our goal over time, we know multiple business coaches and stuff, though, is to get a couple that we really like and respect, and to basically, for us to negotiate deals for our clients that are a good bit less than what a lot of the coaches will charge straight up when they're acquiring their own clients versus a referral from someone like us. Because, we're going to do a good job of helping you, but sometimes, people want, again, like I said at the beginning, you can't be the best at everything. So we can't do everything. Maybe eventually, when I get to where we have like 100 employees here, we might have more in-house coaches or ELS implementers, which we're going to get to as well. But now we need to work with partners of people that are really good. But the thing we can do is give you a good lift, like what I've done with a lot of our CPA and attorney partners, to where we can get the cost down a whole lot. And again, those people work with us and they know what we're doing and how we're doing. So anyways, this right here just talks about recurring revenue, and it's kind of doing a little bit of a case study of this business, which is H. Bloom Flower Company, and some of the things they did to improve their business in terms of a lot of those 8 metrics. And I'm not going to go through the whole thing, right? And make this really long, because that's not what this presentation is for. I just want to give you a little bit of a taste of some of the things that we're doing on an ongoing basis, as well as the one-to-one coaching and everything to work on your business. But you can see, average flower store, someone's coming in and buying flowers versus this company, and get subscribers, people that come back and back over again or automatically, and the whole customer life cycle. I mean, that's a tremendous difference right there. And you can even see, Amazon Prime seems dumb, right, in terms of how little you have to pay for all the free shipping you get and movies and everything like that. But you look, when you bring them people back and you're giving them a good experience, like how much more that relationship is worth, right? And so, this is just going through and talking about people with, when we're looking at this, and it's looking at over 80,000 businesses, how much more are they worth the more recurring revenue you have. And I know some people say, well, my business just doesn't work like that. Well, neither did a flower shop originally. There are so many ideas you can come up with, and when you try to innovate, have partners to help you, a team of people, you can find some innovative things. And it just talks about businesses with recurring revenue, how much. So this is without, the blue is with recurring and the orange is without, that more of them are declining in revenue and then increasing by more than 30%. But on the increase down here on the big side of things, they're all in the top, right? And then you can see here, they expect their revenue to increase more than 30% next year. And you can see that. So it's significant. And then stronger profit margins as well, when you have recurring revenue versus having to go out and kill it every time to bring home the bacon, right? To go out and resell and resell and resell. So again, I'm not going to beat this down. You can kind of see it's a lot longer presentation if I really get into it and tell the stories and what so. But we probably have 20, 25 of these different ones. And again, I think for our clients, we're going to make a library of on-demand as well as the in-person live stuff that we do. So that's the value builder right there. So we're going to go ahead and switch to poll number 2. Let's do poll number 2 and throw it up there. Let's get some more feedback from everyone here. And let's see. So, have you ever done an actual business plan or planning where you were looking at different permutations or implementing something new, or when you started your business to really lay it out and what so, or had a business coach? I mean, it is a little fewer and far between from people that have had coach. And so, all right, I think hopefully we probably got just about everyone in here. It looks like the main answer was no, but thought about it. And one person, yes, it helped us a lot. So that's terrific. That's awesome. It does. It's so hard to do, to make the time sometimes, though, when you're into it, right? When you're running your business, there's lots of things to do. You got to take care of customers. There's always something going on. It seems like it's going to be a better use of your time to actually get in there and be running the business. But sometimes you got to step back and work on the business, right? It's kind of that e-myth mastery type thing. The other 2 things I was going to hit on briefly were a couple partners that I have been very happy with. And since we have experience using them in our own business, et cetera, to also help our clients implement them and understand, or if they're not sure, to explain it to them beforehand to see if it is something like they would like to do. So you may have heard of EOS, or Entrepreneurial Operating System, famous book, Traction. This is pretty intense. I mean, but it gives you a roadmap of how to do things and how to keep your whole team on board of seeing and working the same way. Now everybody's gonna implement a little bit differently depending on their business or what so. And now, I mean, versus way back when, they even have a software, to help organize it in the way that they do the framework. And so, this is something else that we're helping some of our clients with as well. And there are actual implementers that this is all they do. So if you're a bigger company and you really want to get into it and you need to figure out how to adapt it to your company when you have lots of different staff, we probably recommend that you go down that route, even though you have us to help you and support you and understand this, and we help you make the decision. But you're probably going to need somebody a little bit more intense on working on it until you get off the ground, and then you won't need them anymore. Okay. So that is also another thing that we do and help our clients with business wise. Personally, I have found this very helpful. It is called Profit First. And so Mike has written quite a few other books as well. But I really like the methodology of this. And basically, here, let me make this bigger. And I can put this in the downloads as well too. Let's see. Adobe won't let me, control spin it up anymore. I had to change it up where you actually have to push down here. So I mean, the big thing about it is when you think about this, I think this is kind of what gave him the idea, is when you look at humans throughout time, this historian, Parkinson, and that's what's Parkinson's law, not to be confused with the disease, theorized that basically as much as we have in resources, we will just consume, right? And so businesses a lot of time, they will just ramp up their expenses and everything to what they make. And there doesn't tend to be a lot left over. And then we as business owners kind of rationalize it like we're growing. I mean, reinvesting and growing, one day I'll harvest from it. But what ends up happening is that we probably could have done close to the same thing with less, And so if we would have just minused out the profit first, then let our expenses be what's left over. Now, you got to be reasonable here. You can't say, make $1 million, I'm going to take 900,000 in profit and run the business off 100,000. That's probably not going to work. 90% profit margin, very few businesses that's going to work for. But it is reasonable that you can have a 20 to 40% profit margin, and not a lot of business owners, especially on the smaller side, are towards that higher number, right? And so then he has a whole system about it. In terms of, and we help people implement this. It's not too awfully hard. It's more about you understanding it, believing it, want to implement it, and then having the discipline to actually do it. Okay. And so, one of the big things is just the banking setup of how you have, different checking accounts where you put all the money in the percentages it's supposed to go, and you actually make your business live and work off of that, right? And then again, we're familiar with doing this because we do it ourselves, which is ironic because we're people before profit. But I do believe in this. I do believe that you can kind of make your own reality. So we have to set these things aside and then make the business work within what it's supposed to. And it's disciplined, right? So anyways, our bookkeeping staff and process is built to be able to accommodate this as well, if you're interested in it. But again, if you're a business client, we'll go over this with you and see if it's a good fit for you, and help you implement it, etc. So let's see, keep on moving on. So moving on, one of the things I think people ask or think in their own mind, or maybe you Google it, is like, who am I going to sell to? Right? Who wants to buy this business, right? And of course, a lot of traditional financial advisors, they try to help, call it succession planning. Some people call it exit planning. That's probably a little more appropriate. And the first thing that comes to mind is I'm going to sell it to my partner or the next generation, the younger accountant or dentist that I bring into the practice. And that absolutely is a possibility, right? So, when we think about these, you could have that internal transition, right? So it could be employees, it could be partners if you're professional type firms, an optometrist or a dentist or an accountant or architect, etc. It could be family. A lot of businesses do get passed down through the family. Sometimes it's just harder to do it this way, because especially if you're passing down to G2, like generation 2 or G3, they don't necessarily have the money. By the time you start getting to G3 and stuff, though, the business is usually big enough and has enough cash flow, hopefully, if it's well run and what so, that the business's cash flow and everything can almost kind of guarantee loans and different things like that, so that there can be a true exit rather than an earnout, right? Because earnouts, especially if you really want to empower the next generation, they can't get loans, they don't have the money. Basically means you work less and less and less, but you keep still getting paid. And they're earning the business out by taking a lot lower salary and giving you a lot of the profit for a certain period of time. But again, that's not necessarily the best way to get the most money out of it, or to be able to take that money to do something with it, whether it's to grow it, invest in something else, etc. There can be industry players, so competitors that might be expanding, that would just like to get into your area or expand as well. Strategic buyers, so maybe they are in a complementary market and they want to enter your new market to them, or they just want to gain share in a different area, and they can cross-sell or something like that, right? So, there may be more opportunity for them than necessarily was for you by yourself. So they're willing to pay top dollar for that ability. Private equity. Yeah, if you are in a business that has that private equity is interested in you, they are usually some of the biggest payers out there, right? They'll pay the most. We're not a huge fan of private equity, even though when you're our client, we're going to try to, get what you want for you. And if they are in the market, they are some of the best buyers for price, right? And if that's your number one thing, with everything else left out, then we'll try to help you get it. The reason we don't like them per se, it's just almost like personal philosophy of, I feel like a lot of what's wrong with our country is private equity. Like when you look at the healthcare system, or say veterinarians, it's one of the worst market areas where they've taken over like 80 to 90%. They'll come in and pay super high dollar, and then after a certain amount of time that things are going, then they'll just jack the prices by 50 to 100%, and just because what they're paying, plus they continue to still pay the vets and stuff, their high salaries and, et cetera, they have to get their money somehow, which a lot of times is making healthcare and veterinary care unaffordable to people, or probably killing a lot of extra animals or what so, because when people can't afford to take care of them, they just have to put them down, right? So to me, like, that's a really sad outcome. But you know what? They're making a lot of money. So to me, they're not my favorite people. But again, we're here to serve our business clients. And if that's the route we got to go for what their goals and objectives are, our job is to be a fiduciary to you to get the highest. Really, where we like to go is to find that win-win-win. Again, come back to that Stephen Covey of like, how can we get our clients closest to the top dollar through the work that we do, the work that they've done all through their life to build that business, and continuing to improve it, and then to take care of other stakeholders like the customers and the employees and the community, et cetera. And there are lots of different ways to do that, whether that is internal succession or to find a strategic partner that's an awesome company that's going to take care of people and is going to get their synergy without having to screw over the customers or lay off your employees or whatever the case. There are other things you can do where things can be financed, like ESOPs, where the employees end up with broad-based ownership of business. So there's lots of cool things there. You can engage business brokers to where they help you find a partner and what so. And sometimes that's very advantageous because they do have a lot of resources. They may already have buyers that are in their Rolodex, but it can be expensive, 8 to 20% of whatever the sale price is. So you really got to be sure that person's going to bring the value. It's kind of like a realtor on steroids, right? That's when I look at it, is most realtors probably aren't worth the commission that they charge, but the ones that are really worth it. The ones that are doing it, you don't want somebody doing a part-time that doesn't have a big Rolodex, that isn't going to get tons of people to come through your open house. You need the realtor that is on top, that's doing an awesome job, that's going to get tons of foot traffic, because they're the ones that are going to get a bidding thing up, and they may sell your house for 20% more, and they charge a 6% commission, between both sides or whatever. And that's terrific, right? You made extra money because that person did that. Same thing, kind of philosophy with a business broker. Okay, so that is that. Let's keep pushing on. I want to get to questions and stuff. So first, you can find this. This is on our price. If you just click on that pricing page, you can come here. And I'm not right here focusing as much on the price as I am. You can kind of see our different levels of service. Okay. So just this year, we launched or the end of last year, we launched a freemium service, which we're trying to leverage some of our automatic stuff that we have, that's economy of scale that we have for our regular clients, as well as experimenting with AI to have a free level for people to be able to join us. It's a little bit limited. It's more kind of DIY, and you can have us manage money when it's a more cookie cutter, right? But this is really us trying to help people that it's hard to afford, but we want them to do better, and we do think if they'll try, they'll end up being able to get up here and be one of our better clients, and that's super for us. And so these are our coach or advisor-led levels, so where you actually have a partner and what's out, and you can kind of see all the different things that are included. And so we spent a good deal of time, kind of laying it out here in terms of, what's the seniority of the coach or the advisor you're going to get, how many meetings per year, do you have, access to some of the other professionals and, accountant, and if people want me to be in on meetings as well too, generally, I'll help anywhere because I want to help our clients, but really in terms of like significant, it's going to be for our gold clients. And then our platform and access to different things that we have, from our financial planning and personal website access to our investment aggregation and reporting, digital estate planning, organization, document management, investment management, and the different levels and access, and how much extra we're going to do on there as well too. And then getting into all the different financial planning. Like I said, we do a lot more than most companies in terms of, not just a financial plan. Everybody just, I do financial planning. Well, what do you do? And so you can kind of see all the different types of planning, different levels, where it'll be. Really, if you need to do complex planning, you want to be our gold, because the comprehensive is where we model out everything for cash flows and taxes. And there's all kinds of, it's not easy, but we can do all kinds of different permutations of planning that you might want to see. And then ancillary and other network services. So this is where all the extra services are. So like what we've been talking about, the coaching, the valuation, the value building program. You can use our bookkeeping or our payroll services. We even have cash management. This is really good. I mean, most business cash, out there is less than 1%, and the banks don't like to pay for your business cash, which is crazy because you're usually not high. You don't need a lot of white glove hand holding on the banking side of things, unless you're going through financing and stuff, but then they're going to make more money when they write the loan, right? So anyways, we found a couple different partners. The main one that we like right now is called Flourish, and it's 4%, straight up. The FDIC goes up to like 2 million. So, I mean, you can kind of see here, let's just say on average between, kind of your cash flow that you need to keep, and the extra that you keep for payroll, and let's just say it was 200,000 on average over the year, and let's say you ended up making 0.025, so 2.5% more just on that. That's $5,000 right there, just extra that the bank is just keeping in their pocket because they're not treating businesses right. So we really keep constantly thinking about these things. How can we add value? And like we have multiple solutions for this. I mean, some of our businesses even have business brokerage accounts, and we figure out how much to keep in the FDIC, get the interest rate as high as possible, and then beyond that, let's put some in a brokerage account. I think the last The couple that I'm thinking about over the last like 3 to 5 years, we made like 6 to 7.5% per year in a pretty moderate to conservative portfolio, on top of getting a better FDIC rate on the cash. And so, I mean, this is not chump change if you're having to kind of keep afloat, savings for your business as well. So you can see all the different things that we have here and what's accessible. You can, anytime you want to, when you're here, you can come up here and you could say, I want to calculate my fee or compare services, and that'll pop here, and you can punch in your stuff, right? So you could say, what level of services are you interested in? Say it's silver. You're like, yes, I do have an advisor right now with Merrill Lynch or Edward Jones or whoever. I've got $1 million with them. They charge me 1%. And then you could say, well, I have to enter my net worth. My net worth is actually 2 million, even though I've only got 1 million in accounts with them. So then this way you can kind of get, well, we're going to charge you versus what they're going to charge you. So then you can hit that and it'll go ahead and produce it for you here. And it says, all right, your existing advisor is charging you $10,000 a year. Okay. And you can see at the different levels of service right here. Let me make it bigger too. The different levels of service, here's what we would charge. If you're eRebel, it's $87.50. If you're silver, pretty comparable. I find if you have an actual good advisor that meets with you a couple times a year, isn't necessarily doing any heavy duty like financial planning, like so, our silver is pretty comparable to the level of service they'll give you. And then the gold, a little bit more expensive, okay? But we do more. So like if your net worth is really $2 million, then what's the other million in? Are you going to utilize all of our business services, or do you have $400,000 in cash, or do you have a rental property? We help with these things, and we try to accentuate either the returns from it, reduce costs, give you economy of scale somewhere. So basically, you'll see all of these different things that you get that you generally don't get over here. Like we manage people's 529s and their 401ks, et cetera, that the advisor with that other firm may not do, right? And it also helps us to reduce conflict of interest. So we don't care if you want to put more money into your business or you want to take out of your investment account and buy a rental property. We're just going to help you do it in the best way possible, right? And so we're just on your side, and we're going to help you with however you want to grow or protect your wealth. Okay. New calculator that we just released today as well, kind of with that updated business. It lets you be able to kind of see business services wise if you do want to leverage using our payroll or bookkeeping or whatso, right? And you'd say, all right, do you need to use bookkeeping? You could say no. And then we have 3 different levels of service. So we have a light, silver, and gold. And so let's just say, hey, I want, and basically we'd have to go over with you. I don't want to run out of time. But basically, it's got some extra things that are included. But I think most people are going to have to upgrade mainly based on just how many different accounts they have and how many transactions. Because we have a good bookkeeper. We're keeping in QuickBooks. QuickBooks is what we use. I also own a farm, and we're specializing in doing farm books and management. So FarmBright is a farm management software. So most people would say, no, they don't need that. We also do live plan, and we're going to help with building out either new business plans, or every once in a while you should do another one. I don't care if your business is already established, with taking where your business is now, describing it all out and talking about the new things we're going to do and projecting into the future. So you need funding or something like that, then yes, this is a great thing to do. But let's say you don't need it. And then the payroll, so you want to do that. Our light is kind of, we set it up, get everything customized for you, but it's kind of DIY in terms of you run it yourself. If you're always paying people the same thing, like salaries, it's easy. We can just set it up to automatic, and you only got to adjust when you need to. Or if it's more complex and we need to change things, and you're adding and pulling people off and need to do bonuses and reimbursements, and you just want to be able to shoot us emails or Slack's channel and tell us what to do, you can pick the premium. So you got 10 employees, and there you go. So you can see here, it's coming out and saying, all right, 11,000, just like the other calculator, but the payroll is going to be about $2,800 per year, and the bookkeeping $1,000 per year. So these are actually more expensive, but you're getting a subsidy based on down here. And these aren't our real profit generators either. So we don't have to charge top dollar for them. So, we get with your regular payroll, if you had the same quality, you might be paying like $7,000 a year for that. And the payroll companies are awesome at hiding their fees. They generally don't even show you what they are. They're like embedded somewhere inside of there when they take it. Then they make extra money off of holding your money before they remit it to the government, etc. So there could be significant. I mean, I've seen businesses paying as high as $25,000 or $30,000. I mean, small businesses. We're not talking like thousands of people. I'm talking about less than 50, and they're paying $30,000 a year. So just the savings off the payroll may pay for everything here, right? And so you'll be able to estimate this just to kind of see what it is and what kind of savings. So even if we said we have $5,000 in cash savings, we're already beating the other advisor, and it's like you're getting all this other stuff for free, right? And so this really kind of gets down to the meat and potatoes of how can we really save you? Not only are we providing all this value and we're trying to get you to do this or do that, but if you displace some of these other professionals, not to mention, a lot of businesses are paying, $1,500 to $5,000 a year to their CPA. If we can displace that cost as well too, then we're talking about some serious savings. Just kind of like in that brochure, the estimate here, for this person, they had $1.2 million, with the advisors. They were paying, that like $20,000 to the advisor, and then $15,000 to the payroll, the estate attorney, the bookkeeper, and for their tax prep every year. So you look at that, yeah, we're not cheap, but when you look at the cost savings, it is significant. And when we can put all these things together, we truly believe for most people that we can do a better job. Okay, so that's pretty much it. This is our team. So obviously you're talking to and me. Tony's he's one of our advisors, but mainly our CPA now. If you end up getting into estate planning, special needs, Barry will be there for you. Case is helping me a lot with the business planning, so that's going to be his specialty. So especially if you're watching this, you'll be working a lot with me and Case and probably Tony, because inevitably taxes come into it. If you're doing a plan or what's you'll be working more with Russ. Investment wise, Franco is our wizard there as well. So me and him do the investments. If you're scheduling appointments, calling in, a lot of times you'll talk to Rich. You're opening accounts, transferring things. You need your cash account set up with Flourish. You'll be working with Catherine. So you really do have a big team of people here. It's not just one person. Especially as a business owner, you're going to need a lot of us, and we are here to do that and to pick up that lift for you. So check out some of our future webinars, coming up. You can see here, you're on this one right here. The next one's going to be a cool one about estate planning and about creating legacies, doing digital estate planning. And then you can see some of the ones even beyond that about inflation. The next business one coming up is this one. So you'll just walk away. There are so many people that are going to do this, and we're going to go over some case studies and how not easy, but how much less hard that it would have been to not just walk away and have a payout for the owner, as well as continuity for the clients, as well as job security for the employees. It's going to be a good one. Whenever you sign up for these, there is another button on there that just says sign up for all the future ones. I would recommend that you do that because you'll get the email from it. If you just can't attend it, or it's not something of your interest, you just skip it. You'll get the replay if you were busy, and you can watch it later. So it's just a good thing to do. So let me stop the screen share here, and let's see if we have any questions. Okay. It says, can the program help businesses that are not currently planning to sell? Absolutely. I'd have to say that's probably more of our specialty because it's very fun when people are super engaged and they're building and they're optimistic and they're hustling. And a lot of times there are tons of things that we can do to help them accentuate. They're appreciative of it. Eventually, they're going to exit at some point, right? But we absolutely can help them. So the value builder, when you make your business better by making those 8 kind of characteristics, when you enhance them, it's going to make your business more profitable. It's going to help it grow faster. It's going to help it work more by itself. So it's going to free up your time to either be able to back out, or if you love what you do, to be able to focus more of your time on the things that you actually like to do. And so absolutely. So whether you want to sell or whether you're in the middle of it, we're unique in the fact that we don't have minimums and whatso. And so even if you're somebody that's just starting up and you're just like, I want help from the get-go, like why wait to make a mess a year or two into it? Like, let's get some help right now, and we'll make a business plan, and we'll get the bookkeeping right and keep records right from the beginning, and get people to talk to me that know what they're doing. And then you're gonna get ahead faster, right? Okay, question number 2, and then we'll probably close down shop today to let you guys get back to it. It says, how much would you help with implementation? So it depends on which part you're talking about. So if you're talking really about like the business coaching and consulting, and then thinking about like the implementation of those 8 characteristics from the value builder or EOS, then it's not going to be a lot of implementation, because that is a ton of work, and we don't charge for that. I mean, eventually, like I said, if we get an in-house EOS implementer or whatever the case, that'd be like a separate thing, right? And they generally kind of charge usually by the hour. They could have a contract if they like got the scope of the work that they wanted to do. But if we were doing it in-house, we give you kind of economy of scale discount plus a subsidy, because you already pay us for the other things. So we help you build the plans. We help you figure out what to focus on. We help you figure out how to implement, but you and your staff are mainly going to implement. If it's too heavy of a lift and your business is too busy, then we're going to help you get an implementer or a specific coach on that's really good at what they do, and we're going to try to help negotiate to get the cost down. Other things, the profit first, we can help you implement that, because it's not a huge lift. I mean, you'll have to open the different bank accounts and whatso to split things up. You have to understand it, be dedicated to implementing it, but we can help on that. The payroll, the bookkeeping, we're going to help you implement all of that. If you pick the light kind of DIY version of the payroll, you're kind of responsible after we get it set up and it's ready to go, and we've trained you on making sure that it goes. Or if it's automatic, it'll most of the time just go by itself. So again, if you're opening a cash account with us or this or that, if you're doing investments, we're going to do all of it, right? So it really depends. But yeah, in terms of running your business and implementing those things, you have to do that. We'll be here to be the sounding board to help you come up with the plans or whatso, but you've got to implement that and get your team to implement that. So hopefully, if we have a lot of success and end up with even more business owners, where we hit an economy of scale, our revenues going up, then we'll be able to hire some of those in-house people, and I'll be able to answer that question differently. That will help with the implementation of everything. So thanks again for joining us. Join us for a future webinar. I hope you are having a great week. Thanks for spending some time with us. Join us next week, as I said, as we're going to talk about creating true legacy beyond basic estate planning. So we will see you then, and have a super rest of your day.